Hey guys, welcome back. I hope you had a really great day trading today. And holy smokes, today was an absolutely wild day. It was Wednesday, September 11th, and we had CPI in pre-market. And we had some absolutely crazy moves, but I'm going to point out some really cool technicals that hopefully you caught. And if you didn't, then you'll be aware of it for next time. But we did open after CPI completely flat in SPY. So we opened basically where we closed on Friday, and then from there we sold off. We sold off down to the bottom of the up gap from the beginning of the week. And once we filled that gap, we had an insane rally all the way to the top of the implied move. So I had the top of the implied move at 555 and we closed just short of that at 554.42. So today's chart was absolutely amazing because if you sold spreads at any of these strikes, you would have made a nice profit today. So if you sold 555, bought 556, bear call spreads, those would have paid 100%. If you sold 556, 567, those would have paid 100%. And on the drop here, and this is what I did, and when we get to SPX, I'm going to show my position and how awesome today played out for me. But if you sold 542, 541 bull put spreads, then you would have made 100% on that, since we bounced right after we filled this gap. And also 541, 540, we were right at that level. You could see this is 541 right here, and this is 542. So both of those were in the money in the drop. So it was scary, but we swung back up and we just had an insane move back up all the way to the 30-minute 200 moving average, all the way to the top of the implied move. And SPX, so we opened here flat as well, right here. And then right away we started selling off. We got underneath the 1 hour 200 moving average, underneath the 35 EMA on the 30-minute time frame, took it down to the bottom of the implied move, under the 30-day average volatility, all the way down to this gap, and we filled it completely. This is the gap that we started the week with, and as soon as we filled that gap, you could see there was maybe 1 or 2 cents outside of that, but after that we swung back up, and that was a massive run. So from the very bottom right here of the gap all the way back up to the 30-minute 200 moving average, 2.7%. In SPY, that was a $14 move. In SPX, that was a $145 move. And here too, absolutely all 4 of these strikes, if you use them to sell spreads with, they paid nicely today. I had the top of the implied move here at 55.55. We closed 55.54.14. And the position I took today, I ended up selling 54.25, so that's right around here, 54.25, 54.15 spreads, and that actually came from me selling iron condors yesterday. So then when that side got challenged, I added here, and then we swung right back up, and I actually closed that out with 89% profit. And when we were down here also, I added 54.20, 54.10 bull put spreads as well. And my thought process was just mechanical. That was the strike I picked because it was outside of the implied move. And once I started to see that wick, once we filled the gap, I decided to add, and then we swung back up. So it was an awesome day. SPY closed up 1.03%. SPX closed up 1.07%. VIX came down 7.18%. And we did close within the implied move today. And then QQQ. We actually opened QQQ up a little bit in the green, and then we started selling off with the rest of the market. We came down to the bottom of the implied move at 452. We actually took it down all the way to the bottom of the 30-day average volatility at 451. And then from there, we reversed higher and we took it above the 4 hour 200 moving average. That was our positive momentum here. a 1 hour 200 moving average. So we got above those two and took it all the way to the 30-minute 200 moving average. If you've been watching lately, I've been pointing that 30-minute 200 moving average out. And also I've been saying that that could be a good place to short. So let's see if the other part of that plays out. So in QQQ, these spreads would have been blown out, unfortunately. But on the bottom side, if on that drop you sold 452, 451 bull put spreads, then that would have paid 100% as we ripped higher. And also 450, 449. I'm not sure what the premium looked like here. It probably wasn't quite as attractive as the 452, but I'm sure it wasn't terrible. So huge move here from bottom to top. We saw a 3.97% move, and I have my color overlay on here, but if I go right here, we did have one red candle over here, but every other candle was green. And actually, I just really quickly want to take it back to SPX because I think every single candle, look at that, every single 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles on the 30-minute time frame. That was absolutely wild. So QQQ did close up 2.17%. VXN came down 6.18%. We are still at 22 for volatility, so do not be fooled. We could come down just as fast tomorrow. And the NASDAQ did not stay within options bounds. We did not close within the implied move today. And then IWM, we did open IWM with a gap down, and then we gapped down underneath the 4-hour 200 moving average. From there, we dropped, we took it to the bottom of the implied move. Bottom of the 30-day average volatility was just below it, and that's where we reversed. We came back up, we got back above the 4-hour 200 moving average, above the 35 EMA, and that is huge. And then we closed in the green. We did see that 35 EMA for the past 2 weeks, and this was actually, let's say, a week and a half. So when we gapped down, not this Monday, but the Monday before, this 35 EMA was our resistance. Today, we ended up getting back above it. And over here, if you were following Stupid Willie, this is where we closed on Tuesday. So right here, the indicator, and on that drop, you could see that we actually saw, first of all, we saw oversold, but second of all, we saw support right here on that signal line. And that gave us the push up. And just underneath us was the 200-day moving average. That's a huge level. We did see a big technical bounce right there. So IWM closed up 0.29%. Our VX closed down 7.06%. And we did trade almost completely within the implied move. Little wick out here, but all of the bodies of the candles completely within the implied move. And DIA had some really interesting technical moves today. When you see it, it's going to absolutely blow your mind. So we did open with a gap down today. And from there, we dropped down to the 50-day moving average and broke underneath it. And then we got into this up gap, down gap, so the island gap right here. And this gap was wild. Okay, so we had, at this level, we saw this bull gap, which got closed out here. This bull gap, which actually carried out and it got closed right here. So then we had this down gap. This was from right around Amazon earnings. This is where Amazon guided lower, but then we gapped over that, and then we had these two gaps right here. So we had a bear gap and a bull gap up top, and then a little bit of bull gap underneath. And when we dropped underneath the 50-day moving average, we filled only the part that overlapped gaps. So the bull gap and bear gap got closed out. We bounced right there where we only had bull gap left. That was absolutely to the penny perfect today. So once we filled that top part of the gap and we bounced on the remaining bull gap, we rallied all the way back above the 50-day moving average, above the 1 hour 200 moving average, got above the 35 EMA, took it all the way to the 30-minute 200 moving average. And if you've been watching lately, once we break underneath the 30-minute 200 moving average with the 35 EMA, we use the 30-minute 200 moving average as a resistance level. And I don't know what the volatility index for DIA says we are at for volatility, but it's likely somewhere in between VIX and RVX. And when volatility is high, when volatility is in the 20s, we get big moves in both directions. So don't be surprised if we do see that 30-minute 200 moving average as a resistance and we come back down to, I don't know, maybe the 1 hour 200 moving average. And tomorrow morning we do have PPI and pre-market. That is the producer's side inflation report. So do expect another day of volatility. And volatility doesn't just mean down, it doesn't just mean up, it means crazy moves in both directions. And DIA did hold that 50-day moving average today. And look it down below at Stupid Willie. We did take it from oversold right here all the way to overbought in the same trading day. That is wild. All right, guys, that is enough for today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. And if you want to support my channel financially as I grow, there is a thank you button underneath the video. And if you can't do that, then please share my channel with anyone that you think would benefit. And starting in SPY, tomorrow's implied move is between 549 and 559, and that is from options. The 30-day average volatility is $2 wider in each direction, 547 to 561. And the implied move on Friday's contract is between 548 and 561. And the trading range for tomorrow in SPY and SPX is much easier than we've been seeing lately. Within the implied move, the only level in the trading range is the 30-minute 200 moving average. So definitely expect that to be in focus. If we do get above that, then the next level of resistance, or the next level to look for, is going to be 559, which is the top of the implied move. 559 is a level on the day from options, and I've seen plenty of times where we pop up and literally to the penny will just reverse at the top of the implied move. I'm definitely not saying that's what happens, but I've seen it many times. It is a level. And then the top of the implied move on Friday's contract, 561, and then that takes us to the bottom of the down gap that we opened the month with. So we closed August right here with a little bit of gap left, just under all-time highs. We opened the first week of September on Tuesday of last week with a gap down, and that gap is right here. So bears like to hide in bear gaps, just like bulls like to hide in bull gaps. Today we saw that right here. We dropped down into this bull gap. I didn't close it out properly, so it's still green over here, but as soon as we closed that gap, we reversed like crazy. So that is SPY. And taking a quick look at momentum really quickly, that 30-minute 200 moving average is still facing down, and then that 50-day and 1 hour 200 moving average underneath our implied move is facing sideways. So we have sideways and down momentum. And one more thing I did forget to add, the 35 EMA, it is underneath the implied move and underneath the 30-day average volatility. And typically, not always, but most of the time, when the 35 EMA is underneath the bottom of the implied move, we see an either flat day or a down day. The 35 EMA is definitely a magnet, and we tend to return to it more often than not. So we had a really big move, so then look to where the 35 EMA is. And then taking it over to SPX, The implied move over here is between 55.05 and 5600, and that is from options. The 30-day average volatility and the next day's implied move, so Friday's implied move, are the same. It's 54.90 to 56.20. So here again, we also have a pretty simple implied move. The only thing running through it tomorrow is the 30-minute 200 moving average. This 35 EMA is underneath the implied move and underneath the 30-day average volatility. So we might see a down day to meet back up with that. And then above us, if we do get above the 30-minute 200 moving average, and we closed right at that level, the next level is 5600. And then on Friday's contract, 5620, outside of the implied move levels, there's not a whole lot of actual resistance to the upside. And then we also have the bottom of that gap right there at the very top of the trading range. That is the gap off of all-time highs, or the gap that we started the month with. We closed August right here, just under all-time highs, and we gapped down, and then we saw that big drop with the 35 EMA as resistance. So that's what we have above us. And right now we are just, let's see how far off of all-time highs we are. So we're just about 2% off of all-time highs. We are not far away at all. And then to the downside, we do have the 50-day moving average, flat momentum there, 1 hour 200 moving average, flat momentum there. And we do need to do something to turn these levels, but just trading sideways above these for a couple days would turn it enough to start momentum going again. And then of course, that 35 EMA coming in from the bottom corner. And then QQQ, the implied move tomorrow is between 563 and 474. I already hear where I made the mistake. This is 463, not 563. So 463 to 474. 30-day average volatility, $2 wider, 461 to 476. And that actually matches up with Friday's contract. And here, let me zoom in a little bit here and take out these arrows. We do have the 30-minute 200 moving average that is right where we closed, and we have that level plus the 50-day moving average with that downward momentum. A good rule of thumb when trading is you don't really want to go long at a moving average that's pointing down. So if this doesn't kick us back right away, then I would expect this to keep us going sideways a little bit until we can turn that momentum. And then the top of the implied move is 474. Top of the implied move on Friday's contract is 476. And then we do have a resistance level right at the top of the implied move and the trading range for the next 2 days. Right here, that is at 477, let's call it. It's 476.5 is where the top of that gap is. And today was a very clear example in SPY, and this is QQQ, but in SPY, as soon as we filled that gap today, it turned into a support and we bounced. Same thing happens with bear gaps. If we fill a gap, the top of that gap usually turns into a resistance. And then to the downside, we have the 4-hour 200 moving average and the 1-hour 200 moving average. Now, remember last week when I was saying that 1-hour 200 moving average pointing down is gonna bring us back down just because it is pointing down, and it did. It is still pointing down. I don't think we're done. We don't have to drop far underneath it, but I do think we're gonna keep testing that level and maybe trapping around it until it does get turned up. And 35 EMA is underneath the implied move and the 30-day average volatility. Usually that signals a down or flat day. And just with how far this is, I would be willing to bet we see a down day tomorrow. And momentum is kind of moving things a little bit lower here. All right, and then IWM, the implied move over here is between 206 and 212. That is from options. The 30-day average volatility is $1 wider in each direction, 205 to 213, and that also lines right up with Friday's contract. And here too, we have momentum kind of pushing things towards the middle, and we've got 2 pointing down, two pointing up, so maybe right in the middle of the trading range. To the upside, we do have 211. That is the long level that goes back a few years now. It's been pretty important. Let's take it to the 5-year chart, 1-week candle, and 211 is right here. So after the COVID rally, we settled right on 211. And once we broke down in 2022, it became resistance. So support in 2021, resistance in 2022. Then we traded underneath that for quite a while. Resistance again here in 24. And we've been chopping around that level, trying to hold it. It is currently just above us. That's that red dashed line. And above that, we have the 1 hour 200 moving average with the momentum facing down. 30-minute 200 moving average, momentum also facing down. And we have the 50-day moving average. Now, I adjusted the 1 hour and the 30-minute 200 moving averages, but I didn't adjust the 50-day. So it might be tilted down just a little bit more. I'll fix that tomorrow, but either way, it is above our implied move. And then underneath us, the 35 EMA is just underneath where we closed. We actually got above it and closed above it for the first time since that gap down last week. This is where we started the month of September with that gap down. 35 EMA was a very clear resistance until we got above it today with that bounce on that 4 hour 200 moving average. So 35 EMA underneath us, 4 hour 200 moving average underneath us. 206 is the bottom of the implied move. 205 is the bottom of the implied move on Friday. So again, the way I've been playing this is if we do drop tomorrow to around 206, then I would sell bull put spreads at the 205 strike, but on tomorrow's contract. And that only happens if we make the entire implied move. And same thing to the upside. If we do come up to 212, then I would be looking to 213 to sell bear call spreads. That's how I've been playing it, and it's been extremely profitable. I'm sure there's a lot of you watching that play it completely differently, but that's just my strategy, and it's been working really well. And then underneath all of this, we do have the 200-day moving average right here, and a decent amount of support just underneath the trading range here. Really a wild looking trading range, and RVX is still at 25, and that usually translates into about 2 to 2.5% moves in either direction. So volatility at 25 is a really fun place to be. And then let's take it to DIA. Tomorrow's implied move is between 405 and 414, and the implied move on the week is between 396 and 413. That is a reading that I do before the week starts. DIA only has weekly options, and they expire on Friday every week. So 396 to 413 was the implied move on the week, and most of the time we will end up closing within that. And we've got 2 days left of the trading week, so let's see if we do close within the implied move. And above us we have the 30-minute 200 moving average. Once we cross this 35 EMA underneath the 30-minute 200 moving average, that tends to turn into a resistance. We've seen it here twice, and we got pushed back down today. So first level of resistance, 30-minute 200 moving average. Then above that we have 413. That is the top of the week's implied move, and then the top of the trading range for tomorrow is 214. We do have a bear gap above that, but it isn't in tomorrow's trading range, it's just above it. And then to the downside, 35 EMA right here, and 35 EMA is still under the 30-minute 200 moving average. That does make us bearish on this time frame. 1 hour 200 moving average right at the bottom of the trading range for tomorrow, and cutting right through the implied move for the week. Just underneath that we have the 50-day moving average. All of the other indices have been trading underneath the 50-day moving average. Today we briefly got underneath it, but once we filled this island gap right here, which I am going to fix in just a second because this top part got closed off, but we got back above the 50-day moving average. So that's going to be probably our strongest support level, and if we do break underneath it, All right, I'll actually fix these gaps later. So just imagine that this green and blue gap is gone and the support is the rest of this bull gap right here. So top of that gap is at 401, bottom of that gap is at 400. So between that 50-day moving average and that 400, 401 level, we have a decent amount of support on the day. So there you have it, guys, for PPI, all of the trading ranges and everything you need to know within them. Have fun tomorrow, trade safe, make sure you take profits when you're out.